Hello traders and welcome to the London Forex Broadsheet's weekend wrap of the markets. The euro rose against major currencies in overnight trading except for the pound, but gave back its gains against the dollar after better than expected U.S. reports on durable goods orders, consumer sentiment, and new home sales. European two-year government bonds posted their biggest weekly gain in a month as traders reduced bets the region's central bank will raise interest rates for a second time this year amid slowing economic growth. Given this week's dismal economic reports from the euro area, along with the continued weakness in crude, it seems that long-term fundamentals have turned against the single currency, although daily fluctuations will likely be driven by the data as it's released. A daily close below the July 7th low at 1.5611 sets up a test of the channel low at 1.5375. A report on German consumer confidence will be closely watched on July 28th. There's no denying that this pair is in a short cycle on the 1-hour chart, and as we will see on most of the major pairs, it is revealing the fact that the markets look to be wanting to buy dollars. The technicals are shifting, and a break and hold under 1.5600 will get the pair locked into a short trend on the 4-hour chart, as well as confirming this 1-hour trend line. The pound was safe for the time being after Q2 GDP came in as economists had estimated, which allowed it to appreciate against most major currencies even though the pace of growth was the lowest since 2001. UK government bonds gained this week after retail sales declined as traders searched for safer assets. The cable successfully tested trendline support of the up channel which was drawn between June 13th and July 7th. After intraday breaks and reversals, we finally have movement on the pound, and it looks to be starting to build for a southside break. $2 and 1.9800 are very important areas. Keep an eye on a break of either for 50 pips of moves, but maybe take heed from these 1-hour charts and favor the short side breaks. The Aussie created a weekly chart doji candle, a reversal signal of the weekly uptrend. At the close of last week's trading, and the Aussie continued to decline for a fourth day, touching a 2-week low even as gold rose during New York trading. The National Australian Bank set aside more funds for U.S. credit losses. The next economic reports scheduled to be released from Australia are the NAB Quarterly Business Confidence and Lending Index on Monday. Oh, how the mighty have fallen! A break below .9550 may set up the pair to test .9200. It is a busy week of Aussie economics that will need some positive reads if this trend line is not going to instigate bigger time frame moves. The loonie continued to rise as crude oil fell during Friday's trading session. The pair reached its highest level since July 11th on Thursday and looks to have found support at the LFB R1 at 1.0129. Further support may be found at the trend line drawn between the highs on June 10th and July 8th. Canada has no economic report scheduled for release until the July 30th Raw Materials Price Index. The 1-hour chart came alive in trade on Thursday and Friday. It awoke from its slumber and made some topside ground. The trend line reveals that the markets are looking to buy US dollars right now. The Swissy rose as traders bought equities and sold treasuries, sending the benchmark 10-year note 7.3 basis points higher to 4.07%. The next economic report from Switzerland will be the consumption indicator on July 29th. Once 1.0420 goes topside, the pair seems to want to move straight to 1.0520, and then if equity markets are in the green, up to 1.0600. The pair follows the 10-year U.S. Treasury yield and Fed funds futures contracts. As such, it has an upwards bias to it in the near term that just needs a bout of positive equity trade to get things moving. The dollar-yen rose as better-than-expected U.S. reports on durable goods orders, consumer sentiment, and new home sales allowed traders to resume selling the yen against higher-yielding currencies as a carry trade. Data regarding overall household spending, the unemployment rate, and retail sales will be released on July 28th. It is a rocky road for any commodity linked to the global equity market right now, and as such we are seeing a pair that is really doing very well to hold above the 200-day simple moving average area. The 1-hour chart is really a testament to the fact that not only does the market look to want to be in dollars at the moment, It is showing that it really does not want to be in the Japanese yen. On the upcoming economic calendar, we have the leading index and the NAB Quarterly Business Confidence Report out of Australia. In Asian equities, stocks fell for the first time in the past 4 days. All major indexes declined as investors saw more write-downs from the financial companies. The Nikkei 225 declined 274 points, or 2.01%, to 13,329, while the Australian S&P ASX declined the most in the region, losing 169 points, or 3.29%, to 4,975. European stocks closed lower on concerns regarding credit-related losses. On the day, the Dow Jones Stock 600 fell 0.2% to 281, trimming this week's gain to just 0.4%. The DAX fell less than 0.1%. The FTSE lost 0.2%, while the CAC 40 gained 0.7%. Wall Street closed mildly higher after better-than-expected reports on durable goods orders, new home sales, and consumer sentiment. The Dow was at 11,370 after gaining 21 points, or 0.19%. The S&P closed at 1257, up $5, or 0.42%, while the Nasdaq finished trading at 2310 with a gain of $30, or 1.33%. Crude oil ended down $2.10 to $123.39 a barrel, falling more than 4% for the week, near levels not seen since early June. Gold rose for the first time in 4 days. Futures for August delivery rose $4.50 to $926 an ounce. Treasuries declined as traders bought equities. The 2-year yield is 2.722%, and the benchmark 10-year note was down 10 basis points to 4.103%. Overall, where do you turn when all the news is bad? Perhaps movement over the last 2 days provides an indication. The US, UK, Japan, and Euro area are all in very weak positions at this time. And there's evidence the malaise is extending even to China and Brazil. While the US economy will expand at a greater rate in Q2 than it did in Q1, there's little reason to believe growth will expand further until housing starts to bottom and the banks get back to the business of lending. So if global demand is slowing, stocks and commodities would not seem to be wise investments, at least not at this time. The place to put your money might be to buy what people down through the centuries have bought during times of economic stress: gold. Today's price action may be an indication of things to come, because while most commodities fell on Friday, gold rose. That may be a trend worth keeping your eye on. This concludes the LFB's review of the global commodities market. Please join our team every night for the next daily global commodities market video wrap. And remember, if you're into the Forex, you need to be into the LFB.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.